is our Forex blog for July 12th, 2012. And like most days, we really want to buy the super strong pairs against the weak ones. You can see a lot of strength last night in the dollar, the yen. The longer term trend in the yen is all up. It's one of the strongest pairs. The Swiss is the second strongest pair. The euro, was super weak yesterday and the day before, and it continued its downslide for part of the night. So you want to look to sell, the weak euro last night up until about 4, and you can clearly see after 5 here that the momentum of the up moves is more than the weakness of the down moves. So whenever you see that kind of pattern, usually it's and a currency's been down, 3 to 4 or 5 days. Typically, you can expect a counter trend move. Now it only lasted for 3 hours because of how weak the euro is. However, trade with the trend that you see. So the yen was clearly the strongest up until about 4, and so that one of the best trades would have been to sell the euro yen. And as you can see on our charts, the price has been going down. We have a trend reversal signal right here, which means probably within the next couple hours you're very likely to get a reversal. But the euro dollar is just extremely crushed. There's fundamental reasons for it, as we all know, and you can use our FX IntelliStop to get you into the trade right here, and notice it got you out all the way down here, pretty much to the pip at the end of the move. And because the currency's been down, I think 4 days in a row, maybe a little bit more, you can kind of expect at one of these Fibonacci profit target levels that I draw each night to be an area where you could get a bounce. This is just absolutely decimated, 150 pips underneath the lower band. It started the day underneath the band with no bounce up out of it for the most part. It's a pretty risky trade buying a currency this week, but when it's this far underneath the lower band, you might want to do a half your normal trade size, and you can see you wrote it up here for about 80 pips. If you shorted that, you lost about 10 pips there, bought again here, lost, bought again on this pullback here, and made about 80 pips. The secret to trading is small losses, big wins. You might have 1, 2, and even 3 super small losses in a row, but all those losses can be eaten up with just one moderate sized move. I mean, moves of this size eat up, 7 or 8 losses. When you use the currency meter, you typically can find high probability trades. Now, when the euro looked like it was going to reverse, probably a safer bet would have been to buy the euro against the dollar, because the dollar wasn't quite as strong as the yen, so it's less risky bottom fishing this one. And notice this one went right to my Fibonacci profit target level. It was also a half number. There's a trading zone area. This is a very likely area to reverse, and you can see the trailing stop got hit in here around 75, out at 32 for over a 50 pip move. And a lot of times when currencies reverse trend, you kind of get a 1, 2, 3 low. It comes down, rallies up, pulls back a little bit. In this case, it continued up at one more time. This is actually an Elliott two-wave, one of our Elliott two-wave system. Usually when a market is this weak, it rallies up. The second wave up, you want to go short right here. It did pull back about 40 pips, and it double topped there. If you took both those trades, you probably would have made about 30 or 40 pips total. When it pulled back and it kind of double bottomed right here, it wasn't able to go lower anymore, and we are at our lower containment band. When it breaks out of this area, it's a pretty high probability trade back up, to the hourly right here at 80. If you use our trailing stop to get out, you would have got out up here at 86. So that's, over a 50 pip move as well. Swiss, super strong. The Australian, the New Zealand was actually the weakest last night. Started getting weak late in the Asian session, and it pretty much was extremely weak until 4, and then had off and on weakness after that. But the if you sold the New Zealand Swiss or the New Zealand yen, you had a lot of good trades. I mean, this really started to show up right here as one of the weaker pairs, and it fell about 50 pips. You have a nice little sideways consolidation area right here, or if you use our trailing stop method to get in here at 46, kept you all the way in down here till 96, so you had made about 50 pips on that trade. And again, it's very risky to sell when you're this far underneath the lower containment band, so you're better off kind of waiting for a pullback, you might have drawn your fibs on here and gotten short at the first or second fib target, or even the hourly moving average is a pretty high probability place. You can see the trailing stop. You might have, if you used that to get in and out, you might have lost a little bit. You went short again and made about 30 pips on the second one. Now, when the New Zealand was super weak last night and the yen was super strong, obviously that was probably one of the two best trades to focus on last night. This one is quite a bit underneath the lower band, so anytime it's outside the bands, you got to trade smaller. You know, cut your trading size in half. If you normally trade one lot, do a half a lot. If you do 2 mini lots, do 1 mini lot. You know, you go short right here, and it pretty much kept you in for the entire move down here near 64. You know, almost 190 pips or so on that trade. And you know, you can also, as you're watching this come down, you know, it breaks underneath here, you could exit half your trade here, and when it hits the next Fibonacci profit target level this far underneath the band, it's likely to bounce, get out of the second half here, and that would have averaged your exit price somewhere in the middle, right where the trailing stop was too. You know, you can scale out of part if you don't feel comfortable holding on, and then use, you know, the next support area to get out. And again, after a currency is down this much, usually you're going to get a deeper move up. You know, it rallied up, pulled back. This is kind of a 1, 2, 3 low. It's still way underneath the lower band. This is a pretty high probability low risk trade because it wasn't weak enough to come all the way back down to the lows. So you're in around right here, let's say 65, and out, you know, at this level here. So you made over 30 pips on that trade as well. And after a two-wave pullback, you know, this is one of the weakest currencies. It becomes safer, you know, to do a counter trend trade. So if you shorted right here, you didn't really make that much because the you know, after the market moves a tremendous amount, typically it goes into more choppy, sideways, low volatility. So you know, your opportunity for profit goes down after huge moves compared to what it was before. 65.37, you might have got out of this trade right here at 10, you know, for a 20-something pip move.